Welcome back. Now, Absa has reported a jump in annual profit driven by a reduction in retail credit impairments and an improved performance in South African operations. Denker Capital's banking analyst, Kokkie Kooyman, joins us now to unpack the performance in greater detail. Thank you so much for your time, Kokkie. A double-digit increase in headline earnings. Considering how much buying activity we'd seen on the stock ahead of these results, was this growth expected?
It was slightly better than expected,
Okay.
and it beat expectations largely because of on the bad debt side, the provision side. But if you break down the result, then loan growth was in total 6%. That's better than Net Groups, who released results a bit earlier this week. That was 3%. And operational expenditure on the Absa side was also about 6%, so in line with loan growth. But the pressure came on net interest margins because of interest rates starting to come down. That puts pressure on interest margins. So the difference between what they pay on deposits and the lend out. But then the provision side, I said, that was good. It was 7% lower. We can dig into that a bit later. But that led to a earnings per share growth of 10.8%.
It's quite interesting. You talk about the loan growth that we saw. That was also more than Nedbank and still managing to decrease their impairment charges. Is this a signal of market share gains at this point, and that they have definitely gotten better in terms of collections?
Yeah, I think firstly, maybe it's important just to bear in mind 2024 was still a very tough year.
Yeah.
Although we had the GNU, which we thought would unleash optimism and would create stronger demand for credit. But I think we forget that the middle market, the middle income group in South Africa is still very, very much under pressure. Took on a lot of debt in the COVID years and still battling to pay that back. So we'll see later, CIB, a commercial investment bank, that actually did well, but the retail part of the bank did poorly. But in terms of loan growth, but what has come through is that obviously inflation started coming lower, and we've seen the start of an interest rate cycle coming lower. So as you point out, I think we can read into the lower bad debt provisions that the consumer is starting to get stronger.
I'm wondering, with this current interest rate cycle, can we then expect a significant uptick in Absa's loan book, or are they maybe still going to or try to be more cautious? Because as we have seen, they'd suffered the most in terms of credit impairments.
Yeah, it's a good question. I think maybe just bear in mind, Absa consists of basically, let's say, three parts.
Yes.
The one is the commercial bank, that deals with corporates, and that's actually 6 times the size of, let's say, the African business, and in terms of profitability, and let's say 3 times the size of some of the retail businesses. So what happens in the corporate bank is very important for Absa. The African bank is about the African parts of the business in Mozambique, Ghana, Zimbabwe. That's about 10% of total. So if we now focus on what's happening in retail space, then what is very interesting is that we saw in the retail space that the provisions were lowered the most. So lending growth in the retail space was only actually 3%, very low, and pre-provision profit, as we call it, was only 1%. So the operational business on retail still was a slow grower, reflecting still consumer under pressure.
Okay.
But the fact that they were able to release provisions to such an extent, which drove the earnings, shows that they've got confidence about where we're going into the future. Just by the way, the second half of 2024 was better than the first half. So that's already showing that the half we're in now should be a good half.
All right. Before we get into the Africa regions, just concentrating on South Africa, of course, this being a strong pillar of the bank's performance. What was quite interesting for me is that out of the forecast that we have gotten for GDP growth in 2025, that seems to be the most optimistic from a baseline scenario, the bank saying that they expect economic growth in 2025 to be 2.2% on a mild upside scenario, 2.8%. From these projections, could Absa not be overestimating the recovery outlook of the consumer?
Yeah. Yeah, I mean, tomorrow will obviously be a very important day in terms of budget day. And if we, let's say, have an increase in VAT, that will immediately slow down growth because, the consumer has to pay more in terms of VAT. So, and that will do damage to confidence as well. So I think anything you forecast now is a bit of it's a bit difficult.
Yeah.
But I must say what they have committed to, there's a lot of events and costs that they had in their head office, or what they call the head office division, and that they commit to being lower next year. So they're quite confident in saying that the return on capital next year will be higher than this year, well, in 2025, and in 2026 even better. So the outlook is good, but I think in terms of loan growth, they're still fairly conservative.
All right, just as we close off the conversation, just a brief look at the Africa regions. Of course, you know their strategy is that geographical diversification in Africa. Is Absa riding the wave even with the challenges on inflation and currency volatility that we are seeing in the Africa regions? Are they riding that wave resiliently?
Yeah. In the past few years, especially the year before, they unfortunately had those two examples of in Ghana where the currency volatility and the bond volatility cost them a loss, and similarly with in Nigeria. And this year, especially in the second half of the year, we've seen what they call social unrest in Mozambique. So what is very important when you do banking in Africa, you must have a so-called portfolio effect. It must be diversified to minimize the risk of a single country event affecting you negatively. And so far, Absa have started doing that well. They are fairly diversified, so that no country is big enough to really hurt them. But in general, if we put all of them together, there were two things that stood out in Africa. Generally, there's more demand for infrastructure development growth. So infrastructure being roads, dams, railways, and obviously that needs financing. And generally, the economic growth in those countries were on average higher than South Africa. But the bad news is the currencies were weaker than the rand.
Yes,
So you lost a bit on the rand side. But I think similar with Standard Bank, over time, the African regions should grow faster than South Africa because they're coming from a lower base. But obviously, a lot of it depends again on the budget and the actions our government takes to potentially our growth rate could be 3-4% if we do the right things. But at least Absa have that advantage. They are big in South Africa, very big in corporate, and then they have got their foot in the door in the rest of Africa. It gives them a nice balance.
All right. Well, we do have to wrap up the conversation there. Thank you so much for your time, Kokkie, and crossing fingers that budget will be happening tomorrow. That was Kokkie Kooyman, banking analyst at Denker Capital.